The 15-year mortgage rate sits at 6.76%, lower than it was yesterday. Last week it was 6.84%. The APR on a 15-year fixed is 6.71%. It was 6.77% this time last week. A 15-year fixed rate mortgage of $100,000 with today's interest rate of 6.76% will cost $886 per month in principal and interest. Over the life of the loan, you would pay $59,423 in total interest. Jumbo mortgage rates. The current average interest rate on a 30-year fixed rate jumbo mortgage is 7.55% to 0.06%, point down from last week. The 30-year jumbo mortgage rate had a 52-year APR low of 5% and a 52-week high of 10.50%. A 30-year jumbo mortgage at today's fixed interest rate of 7.55% will cost you $702 per month in principal and interest per $100,000. On a $750,000 jumbo mortgage, the monthly principal and interest payment would be approximately $5,268. How to calculate mortgage payment? One of the first steps in buying a house is budgeting. To get a general idea of how much owning a home will cost, start by using a mortgage calculator to crunch the numbers. Just input the following data to get an idea of how much a house will cost. Number 1, home price. Number 2, down payment amount. Number 3, interest rate. Number 4, loan term. Number 5, taxes, insurance and any HOA fees. How much house can I afford? Buying a house is a huge purchase and can put a big dent in your savings. Before you start looking, it's important to calculate how much house you can afford and you are willing to spend. Not only do you want to consider your income and debit, but you also want to factor in emergency savings and any long-term financial goals such as retirement or college. These are some basic financial factors that go into home affordability. Number 1, income. Number 2, debit. Number 3, debit to income ratio. Number 4, down payment. And number 6, credit score. How are mortgage rates determined? Mortgage interest rates are determined by several factors, including some that borrowers can't control. Number 1, Federal Reserve. The Federal rate hikes and decreases adjust the federal funds rate, which helps determine the benchmark interest rate that banks lend money at. As a result, mortgage rates tend to move in the same direction with the federal's rate decision. Bond market. Mortgages are also loosely connected to long-term bond yields as investors look for income producing assets. Specifically, the 10-year US Treasury bond home loan rates tend to increase as bond prices decreases and vice versa. Number 2, economic health. Rates can increase during a strong economic when consumer demand is higher and unemployment level are lower. Anticipate lower rate as the economy weakens and there is less demand